Happy Monday, June 3rd, first day of the month for trading, and it's a good day. There was a lot of interesting moves here, but I'm trying to do different things with my recaps all the time to keep them fresh and find what I want to do. And again, I want to help others improve their trading at the same time that I help myself improve my trading. So, I'm going to share with you this different type of recap here. I want you to grab a piece of paper or a computer again and write this down. Really write it down. I'm not kidding here. It's gonna be interesting for you. So take a sec, pause it if you need to, write down 1 minute, 2, 5, 15, 60 daily, entry, stop, risk to reward. Because we do trade reviews in our room every Tuesday and Thursday, but today I want you to review my trade. I want you to try to figure out what I did. Okay, because I'm trying to do a specific type of trading when I can. I have a whole lot of different setups. But why do I have the 1, the 2, the 5, the 15, the 60, and the daily open? It's because I want to see the overall picture. And this is how I think of it. If we take 1 minute traders who only look at the 1 minute chart and they find something in the chart, that's interesting. They're going to play off that. Now, what if the 2 minute traders are independent of the 1 minute traders, but they also see something that they really like, and now they're trading it also? They don't care what the 1 minute traders are doing. All they care about is their own charts. And then you got the 5 minute traders who, again, maybe they don't care about the 1 and the 2 smaller time frames. They don't want to get chopped up, so they look at the bigger picture there. Then some traders trade off the 1 and the 5, or the 1, the 2, and the 5, and they all, they try to get a bigger picture. But then we got the bigger guys here, the 15-minute chart players, all right? They might not ever look at the 1 and 2. Maybe they look at some moving averages, but they don't care about the choppy price action. So they look for different type of indicators. Same for the 60, and of course, the big guys look at the daily gaps and the daily charts and wedges and moving averages. So then me as a trader, what if I can spot the moments where even though these different traders don't know it, the 1 minute trader is lining up with the 2 minute trader, which is lining up with the 5 minute trader, which is lining up with the 15-minute trader, which is lining up with the 60 and the daily and the moving average and the VWAP traders, right? What if you can get on the coattails of all of those things happening at once, even though those traders don't know how powerful a move can be? And that's what I'm trying to do here. I'm learning how to do it, and I'm wanting to share what I'm trying to get at, but that's the reasoning. Trying to find those moments where all of them line up so that a buy or a short is getting bought by the 1, the 2, the 5, the 15, the 60, and the daily all at the same time, or as many of those as you can, so that there aren't orders going against you. Okay, that's the point. You don't want to, if you're going long, you want everyone to long. You don't want people to short or sell, all right? So that's the point here. So I want you to look at this and tell me, what did I see on all of these charts? Specifically, there's specific things about why I entered, when I entered. And then hopefully that will really help you to understand this type of powerful move here, all right? So pause it. I'm going to give you just a sec, but pause it if you need some more time and just look at the 1, the 2, the 5, the 15, 16 daily. Write down in here at least one word or a phrase. Entry, stop, risk to reward, all right? Okay, so let's look at the 1 minute first, okay? What do you see? I saw breaking above the moving averages, right? Breaking above the moving averages, and it started to slope up. In the moment here, it was kind of leveling out, but it was starting to slope up, and it was above the moving averages, all right? That's number 1, and I saw them getting closer together, okay? Number 2, I saw this 2 minute engulfing candle, and then I saw this volume. I was like, wow, that's increasing volume after an engulfing, all right? That's 2 things going for me. I know 2 minute traders will like to see the engulfing, and they will love to see increasing volume break above the 9 moving average. So now I have the 1 and the 2 with a real strategy here that could get them to go long, okay? Then we've got the 5 minute traders. Look at this. Break the low, couldn't make the move down, and then come back up with starting to be increasing volume and engulfing, right? We have our engulfing candle after a failed low of day with increasing volume. I mean, come on. That's a lot. Right there in itself, that's key, okay? Really, I'm going to say it one more time. Break low a day, couldn't make a leg down, increasing volume, engulfing, okay? 5 minute traders will love to see that. They won't care about the 1 and the 2, but they will see that and be like, wow, this is my opportunity here. 15 minute traders, can you find this one? There's 2. You had the 15-minute almost engulfing right there, and I saw it. And then you had this wick that I saw. I was like, wow, it got held up by this 20 moving average somehow. Now, this wick could be meaningless, but I saw this moving average support as a potential support. So not only do I have the 1, the 2, the 5, and the 15, I'm seeing, on the candlesticks, I've got some real support down here of the 20 moving average on the 15. Okay, now check this out. A 5-minute engulfing pattern does not have to equal the moment a 15-minute engulfing pattern happens. It just happened to work out this way in how the independent candlesticks were aligned, okay? So it happened to be that 5-minute engulfing engulfed the 15-minute chart. So then you have the 15-minute chart moving average support with the engulfing, and 15-minute traders will like that. 60-minute chart, it was just above the moving averages, and there was no overhead support, so I like that. And it had room to wiggle. Look at this kind of choppiness, but I was within a choppy range, so I wasn't going against like a huge short at all. And then the daily, big gap up, buyers can step in at any time, all right? So what do we have here? Yeah, so now for the entry, the stop. Where did I enter? Well, I entered it at, let's look at this. I entered in at 22.04. The moment the engulfing happened, the moment it was breaking above the moving average, and I noticed the volume moving averages, the moment it engulfed, right, and it was above everything, and it gapped up. Okay, I put my stop in for 10 cents, 21.94. Now, why did I do that? Well, because I don't want to put my stop at low of day. If I can find better technical levels, and if you have an engulfing with increasing volume, that's the type of trade that it's not going to go back to low of day. So I found 21.94, 10-cent risk, which was below this consolidation right there. I don't have to risk low of day or the same candle. I can find different level of consolidation here. And look at this, it never looked back after this increasing volume and momentum going up. Okay, so then where was my risk to reward? It was, let's see, I waited and waited and waited, and it was 22.34 right there. And what is that? I was risking 10 cents, got in it at 04. Okay, 04. Stop put at 94. So my risk to reward was an even Steven 3-1. Now, tell me what you guys think. If you have any questions about it, ask below. I always answer them, and let me know if you like these type of recaps. I'm just trying to find interesting ways to share information with all of you guys. Thank you so much. Have a great rest of your day.